All right, we're diving into a really radical narrative today. It's a story that, if true, completely rewrites the last 15 years of financial history. We're talking about the silver market, one of the biggest banks in the world, and an alleged plan so huge, it's kind of hard to wrap your head around. So let's get right into it. Everything revolves around this one number, 750 million. And that's not dollars. That's 750 million ounces of pure physical silver. Now, according to the analysis we're breaking down, this isn't just a big pile of metal. No, this is a hoard so massive, it could be the key to a fundamental shift in the entire global economy.
And this quote from the source material really says it all. For, more than a decade, the story everyone accepted was that the big banks were stuck shorting silver. They were betting against it, trying to keep the price down. But what if that whole story was just a distraction? What if it was a smokescreen for the biggest secret accumulation of a commodity we've ever seen?
So that brings us to what the source calls the Great Betrayal. This is the part of the story where the character everyone thought was the villain allegedly flips the script entirely. And in doing so, they might just change the game for pretty much everyone.
Here's the difference in a nutshell. The old story, JPMorgan is hopelessly trapped, betting on silver to fall while it keeps wanting to rise. But the new reality, according to this analysis, they were never trapped. They were playing a different game entirely, secretly buying up all the physical silver they could get their hands on, getting ready for the price to absolutely explode.
So get this. The crucial takeaway is that this wasn't some bad trade they were stuck in. The source calculates that the recent spike in silver prices hasn't hurt them at all. In fact, it's handed them a paper profit of around $44 billion. The very bank people thought was getting squeezed was, according to this theory, the one with its finger on the trigger the whole time.
Which, of course, brings up the big question, how? I mean, really, if this story is even close accurate, how could a single company build up such an unbelievable stockpile of a strategic metal right under everyone's noses? Well, the timeline lays out what the source claims was a 15-year-long con.
It all supposedly kicked off back in 2008, during the financial crisis. When JPMorgan took over the failing bank Bear Stearns, they inherited a whole lot of things, including a gigantic short position in silver. Now, instead of getting rid of it, the source claims they turned it into a weapon. For over a decade, they used it to hammer the price down, all while quietly buying the physical stuff. The end game? To flip their entire position and go massively long, betting on the price to skyrocket, right around the end of 2025.
So how'd they do it day to day? The source breaks it down into a simple, repeatable four-step cycle. Step 1, use your massive influence in the paper market to smash the price down. That triggers Step 2, widespread panic selling. Then, Step 3, you swoop in and buy up all the real physical silver at the very discount you just created. And finally, Step 4, you haul it off to your private vaults. And then you just repeat for 15 years.
But here's where the story gets even more intense. JPMorgan's alleged scheme is only half of the equation. According to this theory, a bunch of external, global forces are all coming together at the exact same time to create what can only be described as a perfect storm, a supply squeeze that could be unlike anything we've ever seen before.
I mean, just to put the size of this thing in perspective, look at this. The entire registered inventory of silver on the COMEX exchange, the main hub for metals trading, is only about 30 million ounces. The alleged JPMorgan hoard is 25 times bigger than that. It's almost an entire year's worth of global mine production. They don't just have a position in the market. This analysis claims they effectively are the market.
And this sets up what the source calls the pincer movement. Imagine this. Over in the East, China is apparently getting ready to severely restrict its silver exports. At the exact same time, over in the West, you have JPMorgan, allegedly sitting on the world's biggest private stockpile. So if you're a big company that actually needs silver to build things, you're trapped right in the middle.
And there's a date, a deadline. According to this theory, the big trigger, the event that kicks off the whole endgame, is China's new export ban. It's set to start on January 1st, 2026. The claim is that JPMorgan saw this coming from miles away, and it's the moment the global supply chain finally snaps, forcing all the big industrial users to come knocking on their door. Okay, so what? What happens next? Well, this brings us to the new reality. If the market is truly cornered and the supply chain is broken, we enter a totally different world. A world where physical stuff, the actual atoms of silver, starts calling the shots over the digital economy we've built. And who gets hurt the most in this scenario? Well, the source points directly at some of the biggest names out there.
Tech and green energy giants. Think Tesla, Apple, Samsung. These are companies built on super efficient, just-in-time supply chains. But just-in-time doesn't work when a critical material suddenly becomes not available at any price.
This one line from the source just nails the alleged power shift. For the last few decades, all the value seemed to be in the bits, in software, in code, in the digital world. This theory claims that the pendulum is swinging back, hard, that real power is shifting back to the atoms, the physical commodities, from Silicon Valley to the people who control the raw materials.
So let's just be crystal clear about what's being alleged here. This is the textbook definition of a cornered market. The claim isn't just that a bank made a really smart trade. No, the claim is that they've gained so much control over the physical supply of silver that they can basically name their price to the entire world. So, the analysis we've walked through today tells one heck of a story. A 15-year master plan that could result in the single greatest wealth transfer in modern history. It argues that the entire industrial world walked right into a trap. And it leaves us with one final, really unsettling question. As the power shifts from the bits back to the atoms, who is going to be the final victim?